Looks like it's just me and you tonight, huh?
Yeah, this will probably be a small turnout.
Dude, the group's been really quiet lately.
I've been 20, 21, 22 is really my peak on Sundays.
Yeah.
But
I've
I
still
was
been
in
doing,
I
I
was
don't
in
know.
the other class and you had pretty good turnout. Almost
Yeah,
30.
I do normally 30 to 40 range is what it is. Uh, I think somewhere around there. I did do that Q&A randomly one night, and I think we had about 20 in there or something.
Nice.
Yeah.
How's you guys gonna heat wave up there?
Yeah, this weekend's gonna be rough, 105.
It's like 94 here, which for San Diego inland's pretty hot for San Diego.
But we're 79 today. We're nice, beautiful.
Damn. Yeah, today's our peak and we'll taper off this week.
Yep. I was harvesting onions and potatoes today. It's nice out there. Welcome everyone. How we doing?
Hey, how's it going?
Good, man. Just chilling.
So my mic works.
I hear you. I hear
Okay,
you.
cool.
That was a nice little hit you had the other day on those apples. I think that was with me.
Yeah,
On
I
that.
actually got those to close the day before.
Nice. Nice. Aaron, how you doing? Avenger, what's going on? I was hoping we were gonna get Ninja in here, but it's not looking too likely tonight, huh?
That's the 340.
Dude, I love that guy. Nick, how you doing? Welcome everybody. We'll get a few more minutes. I don't know how busy we'll be tonight. I think most people would rather just fucking pray on their contracts paying them than actually know how or why those contracts pay them. So probably not a ton of people tonight.
Man, I was trying to help that gentleman. Remember that guy on, was it Monday, that's kind of freaking out about his contract he couldn't sell? He was
Oh yeah,
he was a futures trader, so we had a long conversation DMs. I told him to roll through here tonight. Hopefully he does.
nice. Yeah.
It's him in a screenshot. He actually bought a share of SPY, not an option contract.
Uh,
So I was trying to help him, square that up.
yeah. I actually one time after I did the like Thinkorswim and Active Trader setup lecture, a guy like messaged me that night, and I thought we had a pretty like solid understanding, you know. And then the next day he messaged me and he's like, he was in VC and we were trading and he's like, oh, River, like those contracts are super expensive. And I was like, nah, I don't remember what they were at. They were like $40. And I was like, nah, dude, they weren't like that bad. And he's like, well, dude, I got like, I got like $5,000. It was because his active trader was SPY shares and he bought 10 shares of SPY, not 10 contracts of same day SPYs.
Oh my God.
I was like, I'll just sell them, you know, I guess, or hold them, whatever, you know. I mean, God, it was like $500 a share, so he'd be up $130 a share right now. That'd be nice for him. Welcome everybody. We'll give it a couple more minutes here and then we'll get to rolling. Do you have any cool earnings tonight? Well, you know that already happened. Thursday, TTD, I was curious about that. It's a company I like, wow. I hadn't actually looked at it, I just seen somebody say it was down. Jeez Louise, the 30% drop.
A
Yeah,
little bit of a little bit of a haircut.
wow, 30.9% at those lows. Yeah, 1K is the goat, dude. I wish more people would follow 1K. He's the most underrated person in here. Said that earlier. Dude, I was really hoping me and Crashmas were gonna get saved on this thing. It's not looking good. What else do we have? It's that time. Wow, what? Sick move on sound. Thanks, still putting up a loss for sure, but putting on a ripper. Love to see that. Oh, pins. Robert. Wow. Was absolutely wrecked there for a second. Geez, not the best day for not the best day, huh? Block, everybody's favorite. I don't know why. Big T, nice little pop. Rough. Wow. Quite a few little 20% drops, huh? I know, man. I missed him with 1K too. I can't lie, you know, if I'm being honest, I stay out of people's alerts. I'm notoriously bad luck for others' alerts, so I tend to just not even buy them. Yeah, Mo does get yeah 1Ks. You know, you might be flipping them, but let's be real here. That position size is not proper.
Dude, it's not, but I mean, I don't know. I'm not gonna fault someone if they're successful, but if they're
Yeah.
reckless and blowing ports, you know,
Yeah,
we can have a talk with them, but I mean, teach their own how much he goes in, but I mean,
Andy's withdrawn all the time. You know, he's basically like, I mean, you know,
that's my whole point. Is he actually shows he withdraws the money and puts it in his account.
yeah. Then he also does instant deposit 12 minutes to close and stuff. So, you know, like, that's a little questionable.
But he's a quiet sniper scalper, man. I didn't realize that till he got his tab, you know.
I know. Well, dude, that was because like I don't, you know, I like, oh God, I'll tell you what, I was terrified. But I recommended him to Tilly on MMA. And I was like, don't get me wrong, like I know he trolls her a lot, but like most of his trades that he says on Trade Floor hit. And then MMA was like, no way, dude, he edits like all the posts. And I was like, well, yeah, sometimes, but like for sure, you know, but like actually look at him. Almost everything he says is gonna pay you 10 or 15%, you know, so. Yeah, he's sick. He's sick. But more people should be following your tab, in my opinion. No, like massive drawdown, none of that stuff, you know. Like that's yeah, that's what it's all about. Okay, let me make one more post and we will get to rolling. Wait, will Norvin get his own tap? We got to get the win rate up a little bit on Norvin, you know. Uh, you know, when he hits, but unfortunately there's quite a few misses checked in there, you know. Love that guy though. Love Norvin. Okay, give me just a second. Is there a way to check win rate on Robinhood? I mean, no, probably not. I don't know if there's necessarily a way to check win rate on many things. A lot of those futures brokers you can, you know, but I mean, you pretty well know if you're winning more than you're losing, you know, because your account's probably going up if you're winning more than you're losing. So that's, you know, that's the easiest way to tell how your win rate's doing. And win rate, I mean, it's all touch and go. Like, high win rate is great, but depending on yeah, you can see your year to date on Thinkorswim. Um, but win rate's tricky because like, and I'm not saying that this is good, but there's like another trader. He's kind of a furu, but he's really, really good at trading. He's got a horrendous win rate. I mean, I don't know, probably like 30 or 40%, but he has he finds some very low risk, very potentially high reward trades. And so he misses all the time, but he keeps the losses small. And so when he's right and he hits pretty dang big, So win rate's tricky. Don't get me wrong, if you're in there like scalping, I like to scalp a lot. You need to have a very high win rate for scalping to be effective for you. If you're day trading, as long as you're managing your trades and you're looking for a lot more, one risk, two reward, one risk, three reward sort of trades, you don't have to hit every trade. And one trade can cover a loss plus make you profit if you're, sizing correctly and blah blah blah. So win rate's tricky. Don't necessarily get super hung up with it, but if you are losing a lot and you're losing money over and over again, and your win rate's low, reach out to me, reach out to 1K, reach out to any of us in here, and we'd love to talk to you, or jump in VC with me, whatever you want to do. And I'd love to talk to you and talk about what's going on. But so with that, welcome everybody. Dirty River, happy to have you. Tonight we are talking, you guys know me, I love talking technical analysis, I love talking charts, I love talking fundamentals. We are talking virtually none of those today. We will of course be tying option contract calculations into the chart, but we're talking about option Greeks. That's what we're really talking about today. For anybody who doesn't know what the Greeks are, they are what tells you, how much is your contract making or losing overnight? How much are you going to lose just owning the thing? Everybody, or I don't want to say everybody, but a lot of people, they have no idea what Greeks are, and they don't look at the Greeks. And if you aren't, don't get me wrong, I'm kind of a nerd, so I like Greeks. I like to find things that you can, kind of sort of take advantage of, where you can say like, that is priced, and obviously I'm not doing like the real math on it, but I can pretty quickly say that thing is priced substantially lower than it should be, in my opinion. That was actually a trade, just kind of mentioned it on Pro Trade Floor, but right here, we were trading around this 631, 631.10, and the 632 contracts were $4 or $5. Don't get me wrong, you're going 5 minutes into close, so of course, if you're wrong, you're obviously losing your $4 a contract or whatever it is. But I was looking at this as an 80 cent out of the money contract only costs $4, and it has massive delta. Any little pop is going to pay you some money. So it was an undervalued thing. Ultimately, they paid a lot. I made a little. But you can learn that by looking at options Greeks. You also know, you guys know me, I preach to everybody, the most important part of any trade is your entry. Good entry can make a good trade great. A good entry can make a bad trade not so bad, it can just be reasonable. And so if you understand the Greeks, you know the risk before you enter the trade. You know the potential reward before you enter the trade. I know that a lot of people in here, they don't plan their trades. Maybe you just follow analysts and you're still learning. That's great. No disrespect or anything there. But a lot of people, even some people that, folks think know a lot, they know nothing about options Greeks, and they still hammer these way out of the money contracts, or they'll hold things until they're just absolutely dead, and then even big old bounce comes and it still doesn't save them. You can know all of that with Greeks, and when you understand Greeks, it will start to become much easier for you to take those stop outs and say, if this thing goes wrong, if this thing goes against me, the Greeks tell you what you're really battling just to get back to break even. Something that I always tell people, say you enter a contract and you enter it at $100 and it drops to $50. So you're down 50%. Well, you should have stopped out of that trade sooner. Not only have the Greeks gone against you, but you might be down 50%. But you have to think that contract now has to double. you have to make 100%. You know, your contract that's worth $50. If somebody buys that at $50, like, you know, if you pretend you're just entering the trade, it now needs to double just for you to be break even. And if you're out there always looking for 100% trades, you're going to lose in the long run. So looking for a contract, needing it to double just to get you to break even, you know, go up 100% from where it is, not really going to work. Also, the Greeks start working against you gradually. And so with that, we're going to get into this, talking Greeks, applying them to charts. And so I want to say this is, let me think. I don't know how to put it besides this is a potentially relatively boring lecture. It's kind of, it's information that everybody should know, but it might be a little bit technical. So I want to encourage all of you, if you don't understand what I'm saying or what I mean, or if I ramble about something for too long, please stop me, ask a question. Because this is, you know, like I said, it might not be the most exciting part of trading, but it's a crucial part of trading. And I think everybody needs to, do you need to pour over Greeks all day, every single day? Absolutely not. But you should glance at them before you take a trade. You know, you don't really have to nerd out on them. You don't have to do any of that, but you should definitely glance at them before you take a trade, because then you can at least know what you are risking or potentially making. So here we go. Greeks, what are they? What are we discussing when we talk about them? And so if we want to discuss Greeks, we always have to go to the option. Let me make sure. Give me 1 second. I had to make sure I'm on the right account. Sometimes I share things I don't mean to. So option Greeks, what are they? What are we talking about? Well, if you want to see them, you have to pull up the option chain. And so what we have right here is our option chain. There's, you know, on Thinkorswim, you can add the ones that you want to look at. Tonight, we're going to be talking about, you know, the 4 major Greeks. And then we're going to be talking about something that it's not actually a Greek. You know, it's not actually a Greek, but it directly affects Greeks. And so we need to study it as well when we're looking at the Greeks. But the very first thing that we're going to talk about, so I got my Greeks up here, you know, you pull them up, you add them however you want, whatever brokerage you're on, you know, Thinkorswim, we got them added. Very first one we're going to talk about is Delta. This is the one that people need to look at before taking trades. I think many people don't know what it is, so they don't care. And that is kind of a mistake. And so when we're looking at Delta, Delta is telling us how much will this option contract pay us if the underlying stock goes up $1, or how much will this stock, or how much will this contract lose in value if the underlying stock goes down $1. So what do I mean by that? You know, we're just going to use some random numbers here on the charts. Well, I guess we'll kind of go end of day. Oops. So we're just going to go make this a little bit smaller. So we're going to look at our delta. I got to go a little bigger, I guess, huh? We're going to look at our delta, and we're going to pretend that we're just kind of trading into the end of the day. So 634 calls have 49 delta. Let's say we buy them right here at 631 and we go to 632. The stock has moved $1. So when the stock moves $1, we make $49. If we buy these at 631 and it drops to 630, we lose $49. Everybody understand that. This is the most important, like, of anything. If you ignore everything else in this lecture, this is the part to understand, because you're seeing what I did there. If you don't do this, you cannot properly understand your risk reward on the trade. So, you know, we know our delta is $49, so we can just kind of pretend we're taking a trade right here. It doesn't really matter. Say, you know, we'll just make something up. We're targeting these previous highs and we're buying right here. So we know that we're looking for about a $1 move up. We know that if we go below here, this is where we are going to stop out. So we need to know this while this trade is setting up. And of course, we have to pretend this isn't end of day and blah, 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 but this is how our trade is setting up. We're targeting some previous highs and we're stopping below a previous higher low. So we know we're getting $1 up. We can potentially make $49. If the stock goes down and we have to stop out, we have about, we'll call it 40 cents of risk on the trade. So we know because there's 49 delta, if we're potentially going to lose about half of it, we know that we have $25 to $30 at risk. So we're risking $25 or $30 to make basically $50. It's a one risk, two reward trade. It's a wonderful trade. You cannot know your potential risk reward if you don't look at delta. That's why I really want to emphasize this is the Greek that everybody should really get, just a base understanding. It's super simple. Even if it's the only one you pull up, you look at the delta column and you go to your chart to know how much you are risking or potentially making. So what is delta and what does it actually represent? Well, as many of you know, an option contract, technically speaking, represents 100 shares of the underlying stock. However, you don't actually have that amount of exposure until you get deep in the money. So when we look at delta, the easiest way to think about it is to think of it as you have that many shares of the underlying stock. If you have 50 shares of SPY and SPY goes up $1, you make $50. So that's exactly what we're seeing here. That is exactly what is represented in these options contracts. And that is the leverage that options provide. There's a reason that it's, the most advanced financial thing around. I don't know if there's something more advanced than options as far as all the calculations that go into them. And they also provide, generally speaking, a very, very large amount of leverage for a very, very discounted price. So that is the power of options, is that delta right there. We have the potential to make a lot, technically risking a little. So it's going to kind of lead us into our next Greek, where options have extreme power to potentially make you a lot of money while having a limited risk is in this delta. And the next Greek we're going to talk is gamma. The correlation between these two is where option contracts have extreme power. And so what does gamma show us? So you remember how when we were buying our contract right here, we had 50 delta. So if the stock moves $1, we make $50. Gamma does a similar thing. If the stock moves $1 up, you can see this is the second column right here. Our gamma is 11. If the stock moves $1 up, we actually add 11 to our delta. So you can even see here, it's represented well in these contracts, $1 in the money, and you're give or take $11 higher. You have to keep in mind there's millions of calculations going on every second, so it's never going to be exactly to the dollar. I can't say never, but rarely going to be exactly to the dollar. But gamma shows us if the stock goes $1 in our favor, we get to add to our delta. So because we know, this first move, if we're in these contracts, we make $50. Well, our gamma has now increased, or our delta, because of our gamma, has now increased to $60. So if we go from 632 to 633, rather than making $50, we make $60. So what does that mean, big picture? And why do I say it is what makes options so powerful and so potentially profitable? You are being, and this is how I describe it. I'm sure there's, this isn't what you're going to read in a textbook, but you are being provided additional leverage at no additional cost to you. Your original exposure was the equivalent of 50 shares of SPY. Now your exposure is 60 shares of SPY. It cost you nothing extra to do. The trade just went in your favor. So that is why a really big reason we recommend trading these at the money contracts. You have the highest delta, so smaller moves pay you more. You also, when you're right around the money, at the money, one or two out of the money or in the money, you have the highest gamma exposure as well. So every dollar it goes in your direction, the more leverage you have and the more money you can be making on the same sized move. That is what makes options so powerful. Then you always have to look at the negative side. The really interesting thing about options is they're a limited loss. And, we're discussing, buy to open single leg options right here. They're a limited loss. If I put $95 or, $130 into these contracts, I can only lose $130. If it goes in my direction, it is theoretically unlimited. As long as the stock goes up and your option contract doesn't expire, you will continually make money. And the deeper you get in the money, you will gradually gain more delta. You can see on these short expiration ones, this delta right here, 1.00. That is the maximum delta. And the reason that is the maximum delta is because an option contract, technically speaking, represents 100 shares of the underlying asset. So you can never go beyond 100 delta. 100 delta is also, generally speaking, theoretical. You likely won't actually be getting that exposure due to some of the other Greeks. But you get more money, more exposure for nothing but being correct. So does everybody get that delta gamma correlation right here? Is there any questions on it? I know, again, it's kind of technical, but any questions on it? And I will, just for explanation's sake. So you can see right here, gamma exposure is much lower, but you're getting a bigger move. So this is kind of an example of some of these options having the theoretical side of it, 53, but you move in the money and you're up to 60. So I'm guessing based on no questions, we will move on from delta and gamma. Hopefully everybody understands that. If you don't, feel free to send me a DM or anything like that. Okay, so the next one we're going to talk about is one that I believe is the most widely misunderstood Greek that there is. So we hear it all the time in trade floor. We hear, all this stuff. I'm getting theta burned. Well, you aren't. I hate to be the bearer of bad news. Theta is actually a rate of change. And so theta, that's going to be this column right here. Theta represents something. And theta represents how much money will your option contract lose over either the following 24 hours or into expiration, whichever comes first. So obviously a same day, your theta is going to represent market close 4:15 p.m. or, SPY option close 4:15 p.m. This theta is going to tell you at, 24 hours from now, this contract will have lost $31. Well, it doesn't just hit you. It's not like, if we buy these at noon and then the very next day at noon, $30 is just removed from it. What it really is a gradual adjustment. So you have your 32, you have your 32 theta, and it is going to gradually come off hour after hour. So, what, $1.50 an hour? And like literally $1.50 an hour on this contract. That's all you're losing. If you feel like you're getting theta burned, you are very likely dealing with a bad entry, much more than you are dealing with any sort of theta burn. Of course, when we look at same days or closer expirations, you can see right here, theta, $94. This contract's worth $94. What that is telling us is at expiration tomorrow, if this thing is trading if we're trading at the exact price we're trading at right now, this contract will have zero value. You can see here on this contract, $135. Well, we're 12 cents in the money. So this contract will actually have value. Somebody used to always say that, oh, we're in the money, so theta doesn't affect us. That's actually wrong. When you're right here at the money, you're actually going to be facing some of the largest theta that there is on these short, expirations. So we'll just use this one as an example. 634s, they cost $130. Well, if we are trading 634 and 1 cent at close when these expire, they're in the money and they will be worth $1. So they actually still have $136 worth of theta on them because you only can have the intrinsic value, actual value in the contract, which comes from being in the money. So on something like this, when you're right at the money, you can really get hurt. Even this one, you're $1 in the money, you can still lose $88 of this contract. So intraday, you're not getting theta burned. It's just not really happening. You're likely dealing with a bad entry and you're dealing with, gamma dropping your delta if it's moving against you. So you're dealing with other Greeks. You aren't dealing with theta burn. You're actually dealing with a bad entry more than anything else. And so when can theta be really bad? The weekends, obviously. So theta doesn't sleep. So if we're looking at next week contracts, we're just going to pretend it's Friday. You're going to lose $30 to Saturday. You're going to lose $30 to Sunday, and you're going to lose an additional 12 hours. So you're going to lose ballpark $75 just by holding this contract over the weekend. That's why swing trading is so risky. So we know we're going to lose $75 to this contract. So now we have to go to our delta. Because these all work together. We know we have 49 delta, so we basically need a $1.50 move to be break even. That's, just to be break even. So this is one of those times where theta does matter, and people will always wonder after the weekends, hey, we got a nice move. Why didn't I make money? Why did I not make money? And it's because you lost money to theta and you didn't get a nice enough move for your delta to cover it. So anytime you're swing trading, you can just look at these two columns. Look at your theta column, look at your delta column. You can roughly estimate you're going to lose theta times 2.5. Say that to yourself in your head. You're going to lose theta times 2.5. And how many delta do you need to make up that difference? So we can even see if you're swinging these real close expiration ones, these contracts cost $170. You're going to lose $70 to theta on them. So right off the bat, you're down 40%. If the stock doesn't move at all, if we close 634.30 and we open 634.30, you're opening down $70 just by holding that contract. And so that's what theta does. Oh, nice, Aaron, you just asked the question, I guess a couple minutes ago. That's what theta does over the weekend. Theta does not sleep on the weekends. So never, if you're swing trading, be very cautious. And that is why all of us, anybody who's, a smart swing trader, tells you to buy as much time as you can afford, because you swing these short expirations, your contract's down 40% at open. Well, if you buy a little bit more time, you're going to be down less than 20%. Yes, the contract cost you more, but you should always think of percents as position sizes. Yes, the contract costs you more, but overall position is a smaller loss as long as you're trading with consistent size and blah, blah, blah. So any questions there on theta? And it's one that if you think you're a swing trader, you got to be aware of this. And we see it all the time that swing traders are not aware of this. And so everybody good there on theta? Everybody gets it? And we're going to get into a couple more details on a few of these more examples. But this final one that we're going to talk about, okay, it's ER season. That's why I want to talk about this. We got those people on trade floor every single day. what do you think of this ER? What do you think of that ER? I mean, none of them are the good traders, of course, but what do you think about this ER? What do you think about that ER? And so you always hear people say you get IV crushed. Nobody can actually, 90% of people in OOT cannot actually tell you what IV crush means. There's a reason that people oftentimes, will ask me on trade floor, what will a contract be worth? Because I'll go to the Greeks. That's this very interesting thing that we, with trading, people think there's all this guesswork going on and there's all this like wiggle room and all of these things. Every single thing in trading is math. As I said, a couple of these Greeks are what they call theoretical. So you aren't going to hit things to the dollar very often doing quick math, but you can ballpark know what you're going to lose and how big of a move you actually need to make money based on a Greek, Vega, and implied volatility. Can I give an example when theta is lower? Theta is lower percentage-wise of position the more time you buy. So you can see here, like I said, you got 31 theta. It's not even 10% of this contract's value. If you're swinging tomorrow SPY calls, you have 94 theta. If the stock doesn't move until open tomorrow, then you're going to be down 45 bucks, 50 bucks. You'll be down 50% of this because you have no time to expiration. This one, 50% of the position is going to be gone. This one, you're going to be down 10%. So you buy more time and contract value increases and theta decreases, not only in number, but in percentage of position. So, if you zoom way out here, you go to some like 2026s, you're looking at 10 bucks theta on a $3,000 contract. I mean, very minuscule amounts, unrecognizable on the contract overall. So more time means less theta. Well, I mean, yeah, Nick, unless it goes down and then you go deep in the money, and then because you have a sell to open put, that you can end up massively down, hundreds of percent down on the position because you end up deep in the money. And then you have two options: buy it back for a huge loss, or buy the shares at a price that is now trading lower than. So there is a massive amount of risk with trying to do something like that. And you want to getting hoping that the market does nothing over the weekend is likely a death wish, in any time, it's just very, very risky. MK, so delta will actually gradually get higher. However, and we aren't going to get into this side of it, the amount that you're paying per delta, this is more advanced, but your price per delta is what I call it, is dramatically increased. So, you have to pay $3,000 to get 57 delta. And on a same day, or I guess we got to go next days because they're all expired. On a next day, you have to pay $137 to get the same amount of delta and go in the money, And so delta gradually increases, but the cost for that delta increases. But just because you asked this question, I'll give this example, 57 delta and it costs you, 3,000 bucks, which is a lot, but as we discussed, it's 57 shares of SPY. SPY is trading at $634. So you are paying, ballpark 8% of the value of those shares. So it is still massive leverage provided at a steep discount. Okay, and so with that, Vega and implied volatility. This is IV crush. That is what we discussed when we were discussing IV crush. And what does Vega represent? Vega tells us based on a 1% move on IV. So our IV 7%, if it goes to 8%, this contract is going to gain $26. If it goes down to 6%, this contract is going to lose $26. We have an interesting thing in the market on the ETFs right now. Historically low IV. So we're actually got pretty high Vega on these things because the IV is so low. We should look at, so in any case, how does this help us? How do we care? Can we really trade around it? No. I mean, if you are very, very advanced and you get super into it and you understand how IV works, you totally can sneak a few bucks out of the market here and there trading it. But where is it most crucial? It is most crucial for any sort of earnings trade. So if we're trading earnings, we know IV increases. And so when IV increases, we know that we have to get a very large move to offset it. And what does the IV increasing mean? It goes hand in hand when people say, what is the expected move? You know, you pull up something like, just off the top of my head, Trade Desk, expected move was $11. It obviously went way outside of that. It obviously went way outside of that this time, but that's what we're discussing. IV goes up the bigger the move they are pricing in. And so what was let's see. I think most things made pretty big moves today. Okay, this one might work. We'll see. I didn't actually look at these ahead of time. So Take-Two had earnings today, obviously pricing in a $14 move. Market closed at 228. So 242 was about the expected move on that. But let's just say you buy these 242 contracts. They cost you, let's even go a little closer. We'll go 240s. They cost you, we'll say $300, kind of split the difference on these. They'll cost you $300. We know that we have historically low IV in the market. We have 102% IV on these contracts. And this was probably honestly much higher going into the close. And we know we have 4 Vega. And Vega tells us for every 1% the IV goes up or down, how much will our contract gain or lose? So we can look at this and we can say to ourselves, this thing's probably going to lose 60% of its IV and drop to about 40% around the open. So we take 60 times 4 and it's $240. And our $300 contract has now lost $240. It also has $275 of Vega or of Theta. So that's, we get half of it. We'll call it 130. So of our $350 contract, we're now sitting at 0 because we didn't get the move we wanted. Even though this thing put in a nice $10 pop or whatever it is, based on the Greeks, we will not be making money at the open. As I said, because they're theoretical and we don't exactly know what IV will be, that's how we ended up at likely a negative number based on that math. But we also had a nice little move up. So we get to add maybe, because these things were $10 out of the money, we probably get to add maybe $100 in delta value. So these will open somewhere between $0 and $100 at open tomorrow, even with that nice $10, $11 move, whatever it put in. It was not met. We did not end up in the money. So these things have little to no value going into a Friday. That is what IV crush actually is. It is the IV dropping and the Vega adjusting accordingly. So as I said, plan on a 60-cent drop, $240, another 130, we'll call it, for 370 on a contract that's trading somewhere between 200 and 350. We got nice little delta move, probably adds $100. So $50 would be a nice estimate of what these will be worth at open. And that's it. And so you can go and do this math on any contract, any trade, anything like that. It was even, we had a massive one yesterday, Duolingo, so big old move up. These 400 contracts were $1,000. It needed to hit 410 to be break even. And it closed at $340. It literally had to make a $70 move. It had to make a $70 move just to find you break even on a contract that was that far out of the money. That's what they had priced in. Obviously, ultimately, those 400s ended up being worth a lot. I don't even know, $6,000, $6,800 today at the highs. So trade worked in the long run, but it's insane when you start thinking about the fact that this thing needed to move like, whatever it was, 30% just to be break even. How could a contract that is less than the money have a higher delta? It couldn't. You're likely looking at some sort of a glitch or something like that. But delta will always increase the deeper in the money you get. Oh, and then this is also adjusting if you're looking at something on here that looks funny to you. This is also adjusting for after hours. So these were the prices at close. These were the prices of these contracts at close, but Take Two was actually trading 226. So even though these are being highlighted as in the money, this was the at the money cost was 830. But delta will always be higher the deeper in the money you get. Some of these probably look a little funny though. They could at least. So does everybody get that? And then I should say, just to point it out, because it's one that, trades funny, a name like Tesla, runs at high IV. It's a big mover. It makes a lot of volatile moves, things like that. So sometimes your value on your contracts really is getting moved around quite a bit by the IV. It's not uncommon for Tesla to make, 2, 3, 4% moves on IV. And so with 6 Vega, that's 15, $20 if the IV goes in your favor. That's so if you've ever heard me or anybody else talk about selling into strength, you want to sell at the bottom of this candle. You get a big old dumper candle because by the time you get back over here, it was worth more right here because the IV had shifted in your favor. Even if it's only a little bit, the IV had for sure shifted in your favor. So it helps you make a little bit of extra money. Do you ultimately make more if you held and this thing goes down? Of course, but you always want to sell into the strength if you can, whether down or up. And that is because you have had a small IV move in your favor. But so does everybody get that? That's the important stuff. And now we're just going to kind of touch on just some little bit of fine detail things, stuff like that of, why we make decisions that we want to make. And I saw somebody, Cody, he brought up a contract. And so we're going to use it as my example. And I'm not trying to do this, this isn't singling him out. I'm not sure if he was on the side of this or not. But called out the NVIDIA 822s. So that's going to be these 200s. So they're $37 and they have 7 delta. You have to think 7 delta, you move this thing $1 the wrong direction, your contract is down large, you're down 20% on a $1 move against you. And it only has 7 delta. You need this thing to really move and really get deeper in the money to make you money. That's why, it's $37. It's $37 for a reason, because nobody wants them. The likelihood of it paying is very low. A common way to look at delta is a percentage chance of this thing going in the money is what delta can represent. And we have delta right here of 7. That means it has a 7% chance of going in the money. That's not very good. This is not the type of contract that you want to pick or you want to buy, because people don't want to be in there. You might see these high open interests. Don't get sucked into that just because it has time. Don't get sucked into high open interest. You have no idea what is going on. Will it make it relatively easy to buy and sell? Sure, but that doesn't mean you should. we've all bought, hopefully only a couple times, but we've all bought a way out of the money contract that we happen to get a very big move and it pays us. Well, and it pays you a larger percent. So we can see that right here. $37. If we get a $1 move, then we make we make 20% or whatever it is. I'm doing quick math in my head. We make 20% or whatever it is. And that's fine. But what I always tell people is always think of position sizes as whole things. And sure, it pays you 20%, maybe it likely doesn't because it's so far out of the money and you got those other things working against you. But buy the reasonable contracts. They will be easier to sell, they will be easier to buy, and while they won't pay you the same percentage, they will pay you a larger dollar amount. So we always want to think in whole position sizes. And I know people want to buy a bunch of contracts way out of the money, cheap ones, and see the huge percentage gain. Well, these are $37. So if we buy, I don't know what that is, 7 of them, 8 of them, we're going to make our $40. If we buy one of these, same price, then we're going to make our $40. It's the same thing, whole position sized, but one of them has much higher probability of paying you a lot of dollars. Don't get me wrong, it's fun. We see people post them all the time of like, oh, I made 800% on this contract that was way out of the money and went in the money. Fine, but it's not good trading. No good trader will ever compliment you for some, I saw people were trading Amazons and they were trading 240s, 250s on Amazon. That's just gambling. That's not really trading, Did they give you a nice little percentage return? Sure, but you could have just bought something at the money and let that thing ride. Get deep in the money and you are making such a substantially larger dollar amount that it's the no-brainer. That's where you want to be. Also, little pullbacks don't hurt as bad. Those way out of the money contracts, one little dip can dump the value on them. When the delta's that high, it can really, really hurt you. So that is the reason. The Greeks are the reason that you don't want to be in those way out of the money contracts, because oftentimes you aren't ever going to make money. We've heard it a million times in voice chats or on Trade Floor where somebody says, I'm in Amazon, it's going up, but my contract's not going up. And it's like, well, yeah, you bought some Amazon contracts that were, whatever it is, $30 out of the money, and sure, they cost you $16, but you're only getting $3 when it moves, and you need a whole dollar move just to make $3. You buy this thing and it moves like 2 cents and you're up $3.
River.
Is that Norbin?
No,
There's a guy that loves.
brother.
How we doing? Can I give an example of calculating a contract with using all the Greeks?
Bro, I had a bad week, bro.
Norbin's on the there we go. Can you give an example? Dude, Norvin is salacious. What do you mean by that? What exactly do you mean by that? Give me a trade and we can talk about exactly what I'll do. I know 1K. I was gonna talk about that. Oh my God.
Got me so mad, bro.
Let's see. Give me 1 second. I was gonna compare the SPX thing. Okay. I mean, so SPX, everybody loves to talk about it. It really is the greatest example of quit buying these stupidly out of the money SPX, what I tell people all the time, you get in your $50 out of the money SPX. That is the equivalent of a $5 out of the money SPY contract. It costs you $300 or whatever it is, you will make more money if you trade SPY. So we'll just look at SPX. I mean, it's going to be hard because these same days are going to be all messed up, but we'll just look at SPX And okay, so 45 bucks, you get 45 delta on a $300 contract. If you go to SPY, okay, and we'll just look at a random SPY, so we'll just look at some SPYs. So you got your 40 delta. You can buy 3 SPYs, 4 SPYs. I mean, when it's same days, let's be real, they're $50. Your SPX costs you, so you can get 7 of them. So you're gonna wind up with 280 delta. You will make the same amount, if not more, with those SPY contracts. You will also be risking less because when SPX wicks against you, you lose money. So you wind up with such a higher delta, higher gamma, lower theta, and less IV to deal with. That's something that's really understated in SPX, and of course, these are for tomorrow. It's 24% IV with $119 Vega. And look they're moving right now. You can make or lose hundreds of dollars just to IV on something like SPX. There's a reason that people trade SPY. Big money trade SPY, smart money trade SPY, all algos trade SPY, all very profitable day traders trade SPY because it's the most liquid, most profitable thing that you can be trading in the market. SPX is a hedging instrument. So I will guarantee you SPY will 90% of the time outperform SPX dollar as well as percentage wise. Okay, so Omid, yeah, let's check it out. We're just gonna go back to SPY because of this trade, only because it's on my mind because I took it today. So here's our SPY trade. We got our SPY chart right here. We're considering buying this dip right here. We're targeting virtually these previous highs. This is our whatever this is our plan, and we know our stop out is down here. We'll call it 63.60 just to make it easy. So we know our stop out is down here. And then we pull up our option chain. So when we pull up our option chain and we go to SPY and we go to our SPY contracts and we say, okay, we're going to use this one so it's $50 so it's easier. We say, okay, I get 50 delta. These cost $130. Now we go to our chart. Because we know we have 50 delta, we can say, if we get the move to our 632, we will make $50. You'll actually make slightly more. If we get this drop down to 630.60 and we have to stop out, we know that that's 40%. So we're going to lose 22 bucks. And we know that before we enter the trade. So we know risking 22 to make 50. We have one risk, we have one risk and we have 2 reward. And we know that from our delta before we take this trade. Well, we can even take this a little bit farther. I'm happy that you asked this. So we'll say we've made our $50, So now we ask ourselves, okay, do I want to swing? Because I can also look at this contract and say, okay, I got 131 theta. I know that we have 12 hours between market close and open, a little bit more than that, but we're going to lose about, we'll call it 60 bucks. So we're up 50. If we decide to swing, we need, and it's at 632. We need SPY to open at 633 to be Oh man, okay, we'll start again. No problem, because I like this. It's a great way to wrap it up, and then we'll call it a night. So we got our SPY chart. We know we want to buy it at 631. We know that our stop out, previous, high or low, is going to be this 630.60. We know that our target is this previous high, 632. So we go to our option chain. We know we got about 50 delta. Delta tells us for every $1 the stock goes up or down, we either make or lose $50. So we know if the stock goes from 631 to 632, our target, we make $50. We know that if it goes down here and we have to stop out, we're risking a 40-cent downside move. So about 40% of delta, our delta is 50 bucks. So we'll call it 20 bucks. We'll call it 20 bucks. And so we have $20 risk for $50 potential profit. And we know that, and none of this will be to the dollar, as we know, because of gamma, things like that. They're always shuffling a little bit. Well, maybe we're happy and we know this is a next day contract. We're up our $50. So we go to this. We got theta. We got about 50, 60 bucks of theta. So we know that if we want to open still green $50 from our entry price, we need to be looking at about 633 just to be break even. Any move above 633, then we know we're making more money. So that's how we use delta and theta to decide, how much do I need to move to continue making money? And it tells us all of that before we decide to swing. Yeah, can I explain the end of day trade? Well, it's kind of a tricky one. Actually, it's kind of not a tricky one. Yeah, why not? Well,
Does
so I
that
will.
also help like detecting?
So I will say, these yellow lines that I drew right here, these were the plan. So that was already the plan. There were some advanced things going on. This isn't for everybody. And into like you can't just make this decision, okay? Based on, you can't just take a trade based on what I'm about to tell you, because you will get wrecked. So market on close came in today, 1.5 billion to the buy side. That's big buys. It's not a huge market on close, but what we know about market on closes is that oftentimes, not always, when there's that imbalance, they will want to track us close to VWAP, because for all those buy orders coming in, they want to be selling us close to the average price of the day, which VWAP is going to tell us. So we're going into end of day. We've had a nice push up. We've set higher, or set some higher lows. We also had 3 push wedge into our first higher low. Nice consolidation, pushing up. This is my favorite setup in the market, is this, right? Like this right here is my favorite setup in the market. We break the level, we come back to the level and retest our level. This was my plan right here. My stop was right here. This was my target. I didn't hold that long. I'm going to tell you right now. I took them right here. They were cheap. They were $5, $4. Actually, that's what I got filled up. $4. Sold them right around here. $8, $10, something like that. So we had market on close and balance. We had to the buy side. We had a beautiful setup on SPY. We had Apple wicking down to VWAP and bouncing. We had Amazon cracking above its VWAP on absolutely, or hourly 20 on absolutely massive buyer volume. We had big buyers showing up on Microsoft. Again, you probably can't quite see it in my chart, but we had massive buying starting to occur on Microsoft heading into that close, and then NVIDIA was, funny enough, put in a really nice move up. NVIDIA was the one I didn't like. I was looking for triple top 180, or, not to take a trade, but this is what I saw. I saw triple top at 180. We did do the same 3 push wedge, higher lows, but just kind of a weaker name. This was the one that had me worried. Everything else was set up to pop. And so that was why I posted on Pro Trade Floor. I mean, you can look it up. I think it was about 1254 or so right before this candle. 632s for $5. And so then that's what we bought. Let's see. So then we bought these, and now of course they're deeper in the money. So give me 1 second. I linked this to like something. Who knows what 7 is? So then we bought the 632s, and here's the 632 chart on them. So we bought those 632s, and this is a really good one because if we look, when we go back to our option chain, but we're selling the money, you won't be able to see it. So this is a good one because we can look at this and say, we're $1 out of the money on on a volatile day, and these things are trading $3, $2, $4. Wow, $4. I can't believe I got filled at $4. These things are trading $4. That is too cheap for that contract. As I recall, they were sitting about 50 delta for $5, $4, whatever you could get filled at. So with 50 delta, we know that, you know, every 10 cents, we're making $5. I knew that my contracts cost $5. I knew that if I got a 10-cent pop, these things were doubling. I got a 10-cent pop and these things doubled. That was it. You know, it was playing that imbalance. It was playing that big setup. I love the setup on SPY for upside. Love the, you know, aggressive sell day all day to catch the pop into close. That's of course not always going to work, but this is one of those trades where just everything lined up to make it just a wild one. You know, I mean, these things went on a heater, $4 to 117, you know, I sold at 8. We can look, I mean, so I talked about them like somewhere right about here. God, I don't know how I got filled for 4. That's hilarious. So talked about them right here, $4, and you can see just a couple minutes later, 108. Like that's, or I mean, sell them at 8, and that's what I did. You know, cash them right here at 8, and then obviously they went a lot more. Oh yeah, I mean, you need the quick move up, but you also at $4, you aren't gonna lose it super fast. Like even unless we absolutely crush and it really goes against you, even if we didn't get this move, you were likely going to be able to sell these for like $2 after the close. You know, not like as long as like you didn't get the outsized move against you, you were still going to be able to take a couple of bucks back out of them, you know. Then that's just option pricing. You know, those are just a little too cheap for and especially for the setups we have where they're just like piling into everything, you know. Okay, 1K, you got a question? What do you got?
Regarding big funds, do they have to end each day delta neutral, or do they try to be as close as possible?
They try to be as close as possible, and that's where one of the that's a big side of that market on close imbalance is when they're big. When you see those $4 billion, you know, market on closes, funds ain't getting home delta neutral on that day. It's too hard to fill it all. There's too much going on. And they very, very likely are they're exposed. Like they have some risk in it. They could be long, they could be short, you know, we don't know, but they get the imbalance information before we do. Who knows actually when, somewhere between, you know, 12:30 to 12:45 our time, because as a market maker, they have a legal obligation to provide liquidity. So the market can't just dump $4 billion in orders on them. It would overwhelm them. It would mess things up. So they get that imbalance information a little bit before we do. So they can start building up that liquidity, getting those shares, getting those kinds of things. And then obviously, you know, we see it like it's pretty cut and dry on SPY. There's $1.5 billion of buying, you know, and it's not just SPY, obviously, it's market wide. But there's that's what $1.5 billion worth of buying into the close looks like, you know. I mean, and don't get me wrong, 2.7 million shares of SPY, the volume alone on that contract. So they want to be delta neutral, but they end up exposed a lot, you know. Obviously fine in the long run, but they love delta neutral overnight because then they don't care where the market goes, you know. And that's always what I try to teach people, you know. And don't get me wrong, I always stream my 5-minute chart. This is what big money cares about. Where'd we start? Where'd we end? That's what matters to them. The mess in the middle is just them collecting commissions and algos trading against each other. That's all it is, you know. Did I answer your question?
Yep, thank you.
Oh no, Aaron,
looking.
those were same days. No, those were same days. No, those were same days. Those were absolutely same days. I mean, that's the only way you can catch a $3,000 move or 3,000% move on a contract is the same day, you know. 3,000%, and I took 100. But you are right, I should say. You want that move fast. So it's tricky. No, it's tricky. No, even though they're out of the money, you have, funny enough, IV value left over. Like I said, if it goes against you, you're gonna wind up at, you can get a buck out of them, but you're gonna wind up seeing that 0.005 value on them, you know. But you will oftentimes on those like slightly out of the money things still retain a little bit of value. I mean, we could just let's see. Um, so let's see at the close, I don't even know what we were trading. God, 633. I mean, you can even see right here, these 633s closed the day at 17. And they were, oh, we probably closed just slightly below it, huh? Yeah, we probably closed just slightly below that, the actual 15-minute after close. But there will all like I won't say always, but you know, if you are at the money, there will almost always be a buck or two left over in there. You know, whether you take it or not, obviously is a different story, but there will almost always be a buck or two left over because there's just a little baked in value left. Okay, so any questions? Thank you. We ended up having a nice little crowd. I wasn't sure if we were gonna break 20 people. We got almost to 30 there for a second. So thanks for being here. I know it's not the most exciting thing to talk about, but start using it in your trading. And if you have any questions, you know, DM me, ask me as always, Greeks or not, you know, always feel free to message. But use the Greeks in your favor. Know how much you're risking, know how much you might make. And let me know how it goes. And with that, thank you so much, everybody. We will talk to you soon. Have a
Yo,
great rest of your
River,
night.
later, brother. Yo,
Norbert.
can you check Nibius for me? You think
No,
banger
it
stock
ripped.
to 100?
It ripped. Who knows what that fucking thing's gonna do? I guess I did actually kind of want to look at it because it was up massive today. What was the news on it? Oh, earnings.
Yeah, good earnings.
Well, they lost money. That's interesting. Oh yeah, they lost 38 cents a share, which was better than a 42 cents a share loss they were expecting. They made $105 million total. Yeah, wow. That's just insane.
Yo, River, going back to what you were
They
saying
had
about the Greeks.
105 million in sales, and they missed the 7.2 billion estimate. That is horrible earnings. I don't know why this thing's up. That is
Yeah, I know, right?
absolutely horrendous earnings. Are you kidding me? They missed by like 99%.
And they ripped. That's
And it
funny,
ripped.
right?
Okay, right on. Thank you. Ike, right on. I really appreciate that. And again, you know, if you got any questions, let me know. But we will call it here. Thank you all so much. We will catch you tomorrow. Friday fun day. Have a good night.